If you're deciding on whether you should switch from an LLC to an S-Corp, you're in the right place. Most people start out as an LLC, which is great, but as your business grows, not switching to an S-Corp could cost you thousands in taxes. I'm a co-owner of a physical therapy clinic here in New York City, and switching to an S-Corp has really saved us a lot of money. In this video, I'm gonna break down the key differences, why we made the switch, and how to know if it's the right move for your business. So first, just a quick background on our business. In 2023, me and two of my partners started our own physical therapy practice right here in New York City. And we first started the business as an LLC, which means that it gave us liability protection, which basically just means that it protects our personal assets. And if you want more info on how to get an LLC started, I actually made a whole video walking you through the process, so I would check that out if you're just getting started. So back when we first started as an LLC, we weren't really focused on saving a ton in taxes and worrying about tax strategy. The main focus was just getting the business off the ground, getting more clients, and making money. The LLC was the perfect way to start, in all honesty. I highly recommend everyone starting their business as an LLC. So now let's clearly define what an LLC is versus what a S-Corp is. An LLC, or a limited liability company, is a business structure that offers you personal liability protection, which means that your personal assets are protected in case your business undergoes legal issues or debts. Basically, it's just a legal structure that protects your personal assets just in case something in your business goes wrong. So an S-Corp is not another type of business structure or business entity type. All it is a special tax status that existing businesses can elect for. And with an S-Corp setup, you effectively become an employee of your own business. And because you're an employee now, you have to pay yourself a salary, and any other profits that you take outside of your salary have to be issued as a distribution. And this is pretty important because your salary is subject to payroll taxes, which is the withholdings for Medicare and Social Security, but your distributions that you take are not. This means that you're gonna avoid having to pay the 15.3% self-employment taxes on the portion of your income that you take out as distributions. And honestly, that right there is the main reason why people switch to filing taxes as an S-Corp. So it's important to note that just because you choose to file as an S-Corp now, you don't lose the personal liability protection that you would get from the LLC. You're still technically an LLC, you just are now wearing this S-Corp hat. That just means that you file taxes differently. It's not gonna change how you run your business day to day. It's just a way for the IRS to tax you differently. Next, I'll talk about how we knew it was the right time to switch to an S-Corp. So when we first started in 2023, like I said, we were just an LLC, and we were really just focused on making more money, getting more clients, and really getting the business off the ground. And so over the years, thankfully, we were able to do that. And so now we're making a lot more money, and we have a lot more profit. And with that, we also have a higher tax bill. And so when we were filing taxes as just a plain LLC, we were paying that 15.3 self-employment tax on all of our net income. And that's on top of the federal, state, and local city taxes that we have to pay. And so we realized that if we stayed in LLC and our profits continued to grow, we were really losing out on thousands and thousands of dollars that we were just paying to the IRS that we didn't really have to. So it was around this time that we started thinking about switching to an S-Corp. I don't think we really knew what that meant at the time. We just heard on social media and stuff that, businesses tend to switch to an S-Corp as they start to grow. And so we just went to our CPA who files our taxes and asked him if he thought it was a good idea. And so our CPA gave us some really good advice. He taught us that a common rule of thumb is that if your business is making $50,000 or more in annual profit, that's probably the right time to switch to an S-Corp. And that's just because once you're in that $50,000 and above profit range, that's when switching to an S-Corp and saving that 15.3% self-employment tax on your salary is really worth it. I think anything below that, sure, you're gonna save some money, but it's not really anything substantial. So yeah, that was the advice he gave us, and so that's the advice I'm gonna give you. If you're at the point where you're making $50,000 or more in annual profit, it's probably a good time to start thinking about switching to an S-Corp. So now I just want to be upfront about the process of filing as an S-Corp because it does require some work. So the first thing that you want to do is come up what your reasonable salary is going to be. Like I said before, as an S-Corp, you're now an employee of your own business. And so the IRS requires you to pay yourself a reasonable salary. And so like I said before, when you file as an S-Corp, you pay payroll taxes on your salary, But any further profits that you take out as distributions, you don't have to pay payroll taxes on. And so the IRS requires you to pay a salary because you still have to contribute some sort of payroll taxes, and that's the Social Security and Medicare taxes that get taken out. And so yeah, you can't just pay yourself an all 100% distribution. You have to give yourself a salary, and then everything else you can give yourself as a distribution. So that's just the way the IRS does it. And the term reasonable salary is actually pretty important. You know, you can't just set your salary to something super low. Like as a physical therapist, for example, if the average salary of a physical therapist in New York City is $100,000, let's say, I can't set my salary as $30,000 as a way to only pay payroll taxes on that $30,000 and then take $70,000 in profits that I don't have to pay payroll taxes on. And so depending on what your business is, I'm sure you know what a reasonable salary is. No one's gonna come after you if you're off by like a couple $1,000s, but yeah, just don't do anything crazy. So now that you've figured out what your reasonable salary is gonna be, your next step is actually gonna be getting a payroll company, because remember, you're now an employee of your own business, and so you're gonna need a payroll company to start paying you paychecks. So there's tons of payroll companies out there. Gusto, Paychex, ADP are all popular ones. So just do a quick Google search and find one that you feel comfortable with. So once you find a payroll company that you like, you're gonna have to go through their sales process. Usually you can't just hire them on their website. Usually they put you with a representative that is gonna be your point person throughout the process. And so they'll talk to you about what type of features you want, what type of benefits you want, if you want HR services, if you have any employees at this point, you're gonna have to talk to them about that. And then at the end of talking to them, they're gonna give you a quote. And then obviously once you pay that quote, you officially have a payroll company. So now that you have a payroll company, you're gonna start getting paid bi-weekly paychecks, just like as if you were working at a different company. And you're gonna see in those paychecks that they're gonna take out the withholdings for Social Security and Medicare. And so those are the payroll taxes that I was talking about before. So now that you're on payroll, you're gonna start getting your bi-weekly paychecks because you're now an employee of your business. You're gonna see on each paycheck that it's taking out Medicare and Social Security withholdings. Outside of your salary paychecks, you can take out distributions just like you were doing before of any profits that you make from the business. And these distributions won't be charged any payroll taxes. And that distribution that you take out, you will have to pay federal, state, and any local taxes that you have, but you won't have to pay payroll taxes on. So now that we're filing taxes as an S-Corp and we are employees of our own business, now you have to file a separate corporate tax return for your business each year. And that's something that our CPA helps us with. And I touched on this a little bit before, but don't forget that just because you're filing as an S-Corp now, you're still subject to any local, city, or state-specific taxes that your region might have. So for example, in our case, New York City doesn't recognize S-Corps at the city tax level, so our business still has to pay the New York City corporate tax. Even with all that though, the overall tax savings that we get from switching to an S-Corp is still worth it. So the main takeaway here is that switching to an S-Corp is a smart idea if you're making $50,000 or more in annual profit. It's not some magic bullet that's gonna get rid of you having to pay taxes. It just decreases the amount that you're gonna have to pay.